I see my name in shining lights. Yeah, a different city every night. Oh, I swear the world better prepare for when I'm a billionaire.
It's time to get down to business on the weekend's #1 business program. Known as the King of Networking, your host Shalom Klein has worked with thousands of entrepreneurs and created countless jobs. So, to success. Let's get down to business.
And indeed, we are all about small business jobs and entrepreneurship and business. We talk a lot about business here. You're on with Get Down to Business, and I'm your host, Shalom Klein. Remember, you can always download podcasts from Get Down to Business on my website at shalomklein.com. And while you're there, don't forget to follow me on Twitter. It's going to be a jam-packed week of content and information you will not want to miss, so let's jump right in. I'm super excited to be joined by Dr. Murray Sabrin, who is an emeritus professor of finance at Ramapo College of New Jersey. And Sabrin was the New Jersey Libertarian Party nominee for governor in 1997, twice sought the Republican nomination for U.S. Senate, but most important for this conversation, he has a newly released book, which I'm super excited to talk about, Navigating the Boom Bust Cycle, an Entrepreneur's Survival Guide, which I know is relevant to all of our listeners as we kick off this brand new year, 2022. We all want our businesses, our entrepreneurship dreams to be successful. So Dr. Sabrin, welcome to the program.
Well, thank you, Shalom, for inviting me. I really appreciate the opportunity to talk about one of the most important issues facing the country today.
It certainly is. And, so I love the title, Navigating the Boom Bust Cycle. So that is certainly something. We are in a bubble. There is no question. And it was honestly well underway even before the pandemic struck. Now, I can't believe it, 2 years ago. So this is certainly something we're going to be living with for quite a while. So simple question, Murray, why do we have booms and busts? Why do we have these cycles?
Well, since the Federal Reserve was created in 1913, they took it upon themselves to basically manage the economy, which of course you can't do from a central authority. The collapse of the Soviet Union and the collapse of other socialist countries have proven that. And central banking is another form of central planning where they think they can set interest rates, short-term interest rates called the Fed funds rate, and have a good outcome, have sustainable prosperity. But that's not been the history of the Federal Reserve. They've created these boom-bust cycles when if you had a totally free market, you would have basically sustainable prosperity where the economy would grow roughly 3 to 4% a year, depending upon how much investment is made by individuals and corporations. And so the boom-bust cycle is really created by central bankers, and that's been the history of the past 300-400 years.
Wow. Something certainly that anybody that's in this world of entrepreneurship, call yourself an entrepreneur, you need to pick up a copy of the Entrepreneur's Survival Guide. We'll give you more information on how you can do that before the end of this conversation. But again, I'm chatting with Murray Sabrin. And Murray, what sectors are most affected by these cycles that we've been talking about?
Well, I think it's so clear. We had a housing bubble and burst. And so we know housing is very sensitive to interest rates. So when interest rates go down, you create a lot of interest in the housing market, a lot of speculation, as we saw during the housing bubble. And right now, we're seeing prices going through the roof and prices increasing at 20, 30, 40% in various metropolitan areas. In fact, not far from where I live, in Southwest Florida, in Tampa, Florida, had one of the largest increases in the CPI the last 12 months. And I think that's due because of the housing market being so strong there. So when you look at across the board, Florida is booming in terms of housing prices up. There are communities where prices are up 40%, 30%. It's a real bubble because what's happening, as you well know, is people from the Northeast, the upper Midwest, California, are moving to more favorable tax areas and open areas in terms of COVID. And so they're bringing their cash and they're bringing their financial resources and they're bidding up the price of housing. We've been here now for a half a year, and it's stunning what's happening in Southwest Florida.
It sure is, absolutely. And we're going to talk a little bit about what people can do about this in just a couple of minutes. But certainly, as I've been learning in this conversation from Dr. Murray Sabrin, that this is something that, again, was already well underway before the pandemic struck in 2020. For everybody that wants to blame everything on COVID, there's a lot more to it. And as certainly we've been talking about, if history is any guide, it's going to last until the end of the 2020s as well. So, I mean, I'm curious. In you have a unique perspective, having run for public office yourself, and I'm almost embarrassed by asking this question. But why do policymakers keep making poor decisions?
That is a terrific question. And I've pondered that quite a bit in doing the research over the past, 45, 50 years on money and banking and financial history. There's an ideology out there that has been accepted by most economists that the central bank, the federal government, can give us good economic outcomes. And that's not the history of the country. The good outcomes come about because of saving and investment, which is driven by entrepreneurs, inventors who come up with a better idea to meet consumer needs. And that's exactly what a free market does. It meets consumer needs. What the government does is create conditions which they think is going to be sustainable by taxing people, borrowing from the public, regulating the economy, printing money, and they think that's necessary in order to have good outcomes, when all the economic analysis show that this does not work in the long term, and even in the short term, it has distortions, such as wage and price controls that Nixon imposed in 1971, getting rid of the last linkage between gold and the dollar, and we've had inflation skyrocket or prices skyrocket since 1971. We've had these inflation cycles, and we could be in the beginning of a multi-year inflation cycle. The last inflation cycle we had was in the mid-1960s to early 1980s. That was a 16-year cycle. Then we've had disinflation for 40 years, and now it looks like we're beginning of another cycle. How long it's going to be, nobody knows. But it's the ideology of the central planners of Keynesian economics that says that government has a vital role to play in the economy, and I reject that lock, stock, and barrel.
I know you do. I know you do. Again, I'm chatting with the author of the book, Navigating the Boom Bust Cycle, an Entrepreneur Survival Guide. It was just released, and it is a fantastic read. I've had the opportunity to go through not only the book, but also a recent article, Lessons Learned from the 200 Years of Booms and Busts in the U.S. Economy, because this is something that is repetitive. And again, anybody that claims to have that title of business or entrepreneur, you certainly need to keep up with this. So is there anything we can be doing? How can the economy become business cycle proof? It sounds like this is just something we need to expect, that hopefully we get through this cycle in the next few years. You already answered, you don't know when this is going to burst per se, but it's probably going to be back around. Maybe it's 20 or 30 years from now.
Well, this is the whole point of why people have been calling for ending the Fed, of just abolishing the Fed and getting, or at least if we have the Fed, that it should adhere to its initial mandate, which was to maintain the purchasing power of the dollar, which of course it hasn't done, and to smooth out the business cycle, which of course is not inherent in the free market, which is basically a Marxist concept. The reason that Marx was so anti-capitalist, anti-free market, is he thought that the business cycle was endemic to the free market, which hurts workers the most. And so he got off the rails, and then Keynesian economists came in the 20th century and sort of picked up that theme without acknowledging it. And so here we are today in the 21st century, where we just keep on doing the same thing. And what did Einstein say? When you do the same thing over and over again, that's the definition of insanity. And so we basically have financial insanity in America, in quotes, where people do the same thing and they expect different outcomes. So again, if we had a free market, if we had a gold standard, which served the country extremely well for 175 years or thereabouts, because the dollar was initially defined as a unit weight of gold. So the dollar is not a money in and of itself, but it represents real money, which is gold. And of course, we've had silver coinage. So again, the market determines what money should be, not a group of central planners in Washington, D.C. or any nation's capital.
Wow. There's a lot that I know you've written, and I know you're very passionate on this topic, so much so that you've been again campaigning for office. I know of your race, your candidacy in 1997 as the New Jersey Libertarian Party nominee for governor, and but then you switched your focus on the federal side and running with the Republican nomination for United States Senate. So I know you're going to continue advocating passionately on this. And in our final minute remaining, and then of course we will make sure that we share your website so people can pick up a copy of this fantastic read. I'm curious, we're having this conversation at the beginning of a new year, 2022. What are some of the things that you would recommend for our business listeners that are out there? How can they sort of navigate these trying times?
Yeah, this is the key point of the book, is that you really got to know your market, your local market, maybe your regional market, your national market, and your international market, and see exactly where the supply chain problems could be occurring, and which of course they're occurring right now to some degree. But one of the important points I make in the book is that we don't know exactly when the bubble will burst. I give some indication in the book on how to monitor that. But the point is, you should be building up cash reserves. Cash is an asset, and it's an asset that serves people well, whether in their personal lives or their business lives. Because when you have cash, Warren Buffett has over $140 billion on the balance sheet of Berkshire Hathaway. So he's building up cash during this bubble, even though he's still invested quite heavily in the stock market and companies, but he has a huge cash reserve. I think he's doing that because when the next cycle declines, he's going to be ready to scoop up bargains at the lower prices with all this cash herd. So that's what I would suggest to people is as the stock market goes up, take some profits and build up a cash reserve.
Definitely. Dr. Murray Sabrin, I don't want you to share all of your secrets in the newly released book, Navigating the Boom, Bust Cycle, and Entrepreneur Survival Guide. Where can people learn more about you and order the book?
Well, murraysabrin.com is a place to go for all the different podcasts. Also, there's a flyer from the publisher that gives you the code to get a 20% discount. The book is also available on Amazon. And so I'm hoping this book is used by entrepreneurs to better their businesses in the future.
murraysabrin.com. We got to squeeze in a quick break. We'll be right back and get down to business. Thanks so much for joining us.
Thank you.